Hello guys, welcome back to my channel. Ayan. Before ta magsugod sa mga subscribe sa akong channel, please subscribe my YouTube channel, Roy Orpano channel, and please click bell button para update mo sa akong mga videos. This video is we're just studying all my subjects, all my major subject and my minor subject. And we're talking about accounting concept and principles. So is ABM 101, which is fundamentals accounting, business and management. So it's talking about money and counting of money, no? Sa mga nasa bangko. Yes. So, Tagbiran College of Business and Industry, Tagbiran City, Bohol. So, pwede siya apalan sa among school, no? So, ang course title niya is ABA 101. So, ang among instructor ani is si Miss Rena Jane Molato. Yes. And ang course title sa among sa ABA 101 is Fundamentals Accounting and Fundamentals Accounting, Business and Management. Then course credit is only 3 units, and course classification is bridging. Then prerequisite is none. So wala siya. The learning module is mo siya ang module 2 namo sa among accounting sa ABM 101. No, ang module 2 namo is about accounting concepts and principles. So, di ko siya pag August 31, September 3, 2021, September 6, 2021. So, intended learning outcomes: explain the GAAP, identify and explain the basic accounting principles, identify the different accounting assumptions. So, accounting concepts and principles, so na siya generally accepted accounting principles or GAAP. So, muna siyang sabot sa generally accepted accounting principles. So, the preparation of financial statement is governed and guided by generally accepted accounting principles. Generally accepted accounting principles are uniform set of accounting rules, procedures, practices, and standards that are followed in preparing the financial statement. These serve as ground rules that guide accounting practitioners in recording or identifying, analyzing, and measuring, and reporting financial information of a business entity. Before an accounting principles becomes generally accepted in the practice, it must first met with the following requirements to wit. So, first is it has been established by a standard-setting body and must have gained worldwide or universal acceptance among practitioners. It must have substantial authoritative support from accounting, such as Securities and Exchange Commission or SEC, Financial Executive Institution of the Philippines or FINEX or FINEX, FINEX, Bangko Sentral ng Pilipinas or BSP, Board of Accountancy or BOA, Mission on Audit or COA, and other respectable members of the financial community both locally and internationally. Important to mention, technical papers and publications of account educators are also including a source of GAAP. Even the Bureau of Internal Revenue or BIR is also influencing in GAAP preparation, and although provisions of Internal Review Code or IRC do not always reflect the goals of the financial accounting, they do at times influence in choice of accounting methods, and we have to bear in mind that the practice of accountancy profession is continually evolving and developing to meet the changing needs of time. As time changes, new accounting principles emerge as business organizations enter into new form of business entity. Let us emphasize, therefore, that there is no comprehensive list of generally accept, accepted accounting principles. Here in the Philippines, the development of GAAP is formalized through the creation of the Accounting Standards Council. Now, Philippines Financial Reporting Standards Council, or PFRSC, a standard-setting body with its own pronouncements contained previously in the Statement of the Financial Accounting Standards, or SFES. Now, Philippines Standards, or PES, used as used as. And here in the Philippines, the development of GAAP is formalized through the creation of the Accounting Standards Council. Now, Philippine Financial Reporting Standards Council, or PFRSC, a standards-setting body with its pronouncements contains previously in the Statement of the Financial Accounting Standards, or SFAS. Philippine Accounting Standards, or PAS, used as the primary source of GAAP. And we have accounting principles and assumptions. Accounting principles serve as basis in preparing, presenting, and interpreting financial statements. They provide a foundation to prevent misunderstanding between and among the preparers and use of financial statements. The conceptual framework of accounting mentions that underlying assumption of going concern. In addition, the concept of accrual, accounting entity, monetary unit, and time period are also important in preparing and interpreting financial statements. And going concern assumption. The going concern principles, also known as continuing concern concept, means that the business entity will continue to operate indefinitely or at least for another 12 months. Financial statements are prepared with the assumption that the entity will continue to exist in the future unless otherwise stated. The going concern assumption is the reasons assets are generally presented in the balance sheet rather than at fair market value. Long-term assets are included in the books until they are fully utilized and retired. We have accrual basis of accounting. The going concern assumption is the reason assets are generally presented in the balance sheet at cost rather than at a fair market value. Long-term assets are included in the books until they are fully utilized and retired. No? Sige, balik na ko basa siya. Though the accrual method of accounting means that a revenue or income is recognized when earned regardless of when received, and expenses are recognized when incurred regardless of when paid. Hence, income is not the same as cash collections and expense is different from cash payment. Under accrual basis, revenues and expenses are recognized when they occur regardless of when the amounts are received or paid. For example, ABC Company rendered repair services to a client on December 9, 2019. The client paid after 30 days, January 8, 2020. When should the income be recognized? On the date it is considered earned or when the service has already been rendered. Hence, the income should be recognized in December 2019 even if it has not yet been collected as one of that date. Another example, suppose ABC Company received its electricity bill for the month of March on April 5 and paid it on April 10. When should the electricity expense be recorded? Correct. March. Why? Because the electricity expense was for the month of March, even if the bill has been received and paid in April. In other words, the electricity was used or consumed in March. And we have also accounting entity concept. The accounting entity concept recognizes a specific business enterprise as one accounting entity, separate and distinct from the owners, managers, and employees of that business. In other words, it means that the company has its own identity, set apart from its owner or anyone else. Personal transactions of the owners, managers, and employees must not be mixed with transactions of the company. For example, if ABC Company buys a vehicle to be used as delivery equipment, then it is considered a transaction of the business entity. However, if Mr. A, owner of ABC Company, buys a car for personal use using his own money, that transaction is not recorded in the company accounting system because it clearly is not a transaction of the company. Time periodicity. The time period assumption, also known as periodicity assumption. It means that the indefinite life of an enterprise is subdivided into the periods or accounting period, which are usually equivalent for the purpose of preparing financial reports on the financial position, performance, and cash flows. An accounting period is usually a 12-month period, either calendar or fiscal. A calendar year refers to a 12-month period ending December 31. A fiscal year is a 12-month period of ending in any day throughout the year, for example, April 1 to March 31 of the following year. The need for timely report has led to the preparation of more frequent reports, such as monthly or quarterly statements. No? Monetary unit assumption. So, nasa slide, monetary unit assumption. So, the monetary unit assumption has two characteristics. So, nasa slide, duha ka characteristic, which is quantifiability and stability of the currency. Quantifiability means that record should be stated in terms of money, usually in the currency of the country where the financial statements are prepared. Stability of the dollar or euro or pound or peso or etc., aka stable dollar concepts means that the purchasing power of the said currency is stable or constant and that the insignificant effect of inflation is ignored. It is to be noted, however, that financial statements of a company reporting in the currency of a hyperinflationary economy, an economy with very high inflation rate, must be restated in accordance with applicable accounting standards. We have other principles. We have 6 other principles, which is matching principles, historical cost principle, objectivity principle, materiality principle, consistency principle, and adequate disclosure principle. First, matching principle. The matching concept means that expenses are recognized in the period that related income is earned, and income is recognized in the period of the related expenses are incurred. In essence, income is matched with expenses, and vice versa. Through the accrual basis of accounting, better matching of income and expenses is achieved. Historical cost principle. It is items in the balance sheet are generally represented at historical cost. Nonetheless, some accounts are measured using other bases such as fair market value, current cost, and discounted amount. You will learn more about them in intermediate accounting. Objectivity principles. These principles require that accounting records should be based on reliable and verifiable data as evidence of transaction. Maternality principle. This principle dictates practicability to rule over theory in determining the value of an item, to determine whether the item is material or not. It is a matter of professional judgment on the part of the accountant. Next is consistency principle. This principle requires that accounting methods and procedures should be applied on a uniform basis from a period to period to achieve comparability in the financial statements. Adequate disclosure principle. This principle requires that financial statements should be free from any material misstatement that if there is a proper disclosure should be made. And we have also accounting constraints. These are the limitation of accounting. Sometimes accounting cannot provide all information needed by a user, which is cost, benefit, and materiality.